the Closing Beat, everybody. Happy Wednesday. How you doing today? Hope you're having a good day out there. This is a quick show that we do called The Closing Beat. Just a quick stock market update. We'll go over the good, the bad, and the ugly, or the quiet for the day, and cover everything for you. We're financial advisors here at Jazz Wealth, and I hope you keep us in mind. Go to jazzwealth.com if you've got an account to transfer, or an old 401k, or an IRA at a company that's maybe not helping you or teaching you. Maybe you could keep us in mind there. We're big on teaching. So one of the ways that we do that is every week we have a class for customers. Tomorrow night is our class. I always post it in the bottom right-hand corner of your screen so you can see. Tomorrow we're going to go over a whole bunch of geeky sort of stuff for kind of year-end review, what to expect going forward. And remember, we don't like to use opinions around here. We like to use the data. So I have got it's a whole bunch going on there. So if you just joined us at Jazz and you come to the class tomorrow and that's your first class, I'm going to kind of throw everything at you. So just a heads up there. Don't let it intimidate you. I will stay as long as you need to answer questions or anything. But I'm basically just taking everything I can and sharing it with you. I think we got a lot to prepare for next year, and I want to come at it from a point of data and sort of looking at the stats versus looking at someone's opinion of what they think. Anyway, so that's that. Also, we're playing a game. It's called Guess the Dow. Take a shot. Where do you think the Dow is going to close next week? We got a holiday shortened week next week, so where do you think it's going to close? We'll still do the show on Friday. We'll tell you who's the winner, and if you are the winner, we'll send you a $100 gift card, or if you're one of our customers, we'll credit you $100. Even if you've already maxed out your IRAs or everything for the year, we can, of course, help you out with that. I'll share, for those of you that are not customers, later on here, I'm going to share some of what we're going to share in the class. So I'll give you a little taste, kind of show you what's going on there, because I want to try to teach you something as well. This whole idea of what I'm doing here is just to teach, right? It may not be that everything I share with you is something that's interesting or that's helpful to you, but I try to teach you something new maybe every day that you didn't already know. Let's talk about the stock markets today. You got a loss of 25 on the Dow, down 1 on the S&P, and 4 to the positive side for the NASDAQ. A lot of that action came in the last couple minutes of the day. A very, very low volatility type day, light volume on the day. But nonetheless, we're still at highs here. We're just sort of trending higher. Been defined as sort of a melt up, which is basically just a slow trend higher with very little in the way of downside pressure. So that's the way we're kind of ending here, at least for the day. Volume is going to be a little misleading, right? So Friday is what's known as quadruple witching day. Happens a couple times a year. It's where different futures options, index options, stock index options, and stocks options all expire on the same day. So it adds to a little bit more volume in there. So don't let that be misleading. You think, oh, I thought it was supposed to be quiet. The holidays are coming along. It'll be a little bit of an odd one there. There's a lot of action probably to happen on Friday. Doesn't mean a lot of volatility. It could be that the markets move to an area and then just peg themselves right there based on where options traders are needing to cover positions or roll out or whatever they're going to do. So a lot of decisions to be made on Friday as well. Today, you've got the markets just down a little bit. Like I said, it was kind of a struggle all day. Yesterday, we felt this as well, where the markets tried to get something done and then they sold off a little bit. They tried again and they sold off a little bit. Today was just basically a struggle because of FedEx. Not looking good for FedEx. We'll cover that in a little bit. If you look at the NASDAQ, we're sitting at new highs here. We poked to new highs during the day, ultimately just kind of closing quiet, and the Dow basically flat on the day, even though it was down a few points. After hours, up just a little bit here so far. We'll get right to it here and just go right into our sector breakdown for you. A couple sectors to cover today, and we'll move on. Communication services, they moved higher, went to new 52-week highs on the day. That was basically because of a reversal in Facebook. So Facebook, over the last few days, has reversed that FTC news that came out the other day back to where it started, basically. Deutsche Bank had a price target of 270. They were at 260, which was way up there. And they went to 270 over the next 12 months, what they think on Facebook. And Barron's put out an article that basically just said, hey, man, don't worry about what is going on. Just go buy Facebook. Those were pretty much their comments was, don't worry about the mess. Just dive in and buy Facebook. So they were pretty bullish on that one. And because of that, you got communication services higher on the day by just over 0.5%. Oil service stocks moved higher on the day again, which is kind of interesting because if you look at the price of oil, it didn't do a whole lot. It was basically flat on the day. But if you look at the oil exploration stocks, which I know a lot of you are looking to bounce off those lows there, they continued moving. A little relative strength there. They did the work without the help of oil overall. So looking pretty good there. That's pretty much recent highs, about a month and a half, 2-month highs if you're taking a look there. We talked about this yesterday. Transport's going to be a little bit weak today because of FedEx, the earnings announcement there. That really kind of hurt the transports and industrials today. FedEx makes up about 9% of this ETF. So when FedEx has a bad day, of course, that's going to hurt the overall sector, and it did today. And then I wanted to point out REITs. REITs, a fighting move here today. So a little bit of relative strength. The markets didn't really do a whole lot today, but REITs were up 1%. And these have been sort of fairly weak, right? REITs have been moving back down towards recent lows and sort of hinting that they were ready to give up those lows. Those comments we made yesterday. Today, they showed at least a fighting chance recovering some, more than half of what they lost yesterday. So REITs not too bad there in the short term. We'll see. I would expect more volatility no matter what you're looking at. We use the ICF to show that. You could use the XLRE if you want. Vanguard's got a couple of them you can look at. It just depends on which one you want to, or best fits what you're looking for there. And that's pretty much the sector update there. I don't have a whole lot more. Regional banks did pull back a little bit. They've been a little bit extended. Same with financials as a whole. Okay to see these pull back. I don't think it's really all that big of a deal. Mexico continued higher today after a bit of a break. So Mexico's been on a tear basically since the announcement of the USMCA deal. So looking pretty good there. And gold miners had a 1% gain on the day, just sort of floating around the moving averages there as it makes its decision whether it wants to rally or not. All right, let's talk about FedEx, down 10%, basically perfect 10% on the day. They missed on earnings by double digits. FedEx missed by 27 cents. Revenues came in weaker than expected. They lowered guidance there. Here's how this breaks down. You got FedEx, I don't know if they call it FedEx Express, but it used to be just called Federal Express. They would print it all over the planes. So imagine if you're of a certain age, you used to see the plane say Federal Express, right? Or if you've ever seen the movie, what was the movie with Tom Hanks in it? Castaway, right? Federal Express on the planes. So there's a couple different categories of their business. You got Federal Express and you've got ground. So Federal Express would be anything that's in the air, all those planes flying all around the world, and FedEx Ground would be the trucks driving around and everything there. They said Federal Express category, the planes, were pretty much hurt by the trade war, not as much international packages flying around back and forth. And then on the ground side of things, they've got a moment where they're sort of spending more because they're working on pushing out the all around the country, I believe, doing 7-day delivery. So they've got some costs associated with technology there, and of course, having drivers around 7 days there. The CEO did his best. He said that they are, basically he said they're at the bottom of where they can be financially performance-wise, and they expect to be headed higher from here. It didn't help. Stock was basically down there, not looking too good in terms of FedEx, so bad day. General Mills added 2% on the day. This is now 8 beats in a row in terms of beating on earnings, so they did really well there. They saw a 1% growth in sales. That was okay. It was a big company, right? So to see small ticks in organic sales and stuff, it's like, it doesn't really move the needle. We were sort of, Wall Street was sort of expecting closer to 2%. It was basically flat. Here's the catch, though. All of the growth for this company, basically the entire reason for the rally today, was because of the pet food division. So they've got snacks, they've got ice cream, they've got pet foods, cereals and things like that. And all of it came from pet foods. They had they own Blue Buffalo. So they bought them about a year and a half ago. So General Mills owns Blue Buffalo, struck a deal with Walmart, more distribution in their stores there. So the growth overall really came from Blue Buffalo. If you look at the sales of Blue Buffalo, they were up about 16%. Don't hold me to that, somewhere in there. And so that's basically it. Now, guidance-wise, the company basically said, we expect 1% to 2% growth going forward. They're still working on seeing some of the results of the marketing efforts from like El Paso, that sort of the powder chili brand and stuff. They own Haagen-Dazs as well. They've been really trying different marketing techniques there, and it really just hasn't panned out yet for them. So still a good earnings report overall, but they're kind of like, thank goodness we bought Blue Buffalo, right? That was a big difference for them. All right, let's take a look at Tesla because that hit new highs, new all-time highs, getting back down to, around towards 400. Couple things. They said they're going to they're looking at lowering the price of the Model 3 production sales in China. So any Model 3s that are currently being built or will be built next year out of China, they're considering lowering the price by 20%. Remember, China's giving them some subsidies there as well, so that helps them out as well. Also, just looking around at the stock, I was just curious because I know there's some big big guys that are short or have been short. The short float has been reduced by about 10 million shares from about 27% to I think around 19 or 20%. That equates to about 10 million shares, probably a few more after today. Hey, things have been moving higher. You can't afford to stay short a stock that's moving $100 or $50 at a clip like this. So that's the news on Tesla. Looking pretty good there. It won't be over for them, by the way. So you got the holidays here, and then in the first week that we come back, I believe they've got the first couple days of the week, they'll report their fourth quarter deliveries overall. So Tesla will stay in the news here going forward, which may be good news if you like it or own it. Eli Lilly happens to be one that we own here. It's getting a little bit carried away here. A little bit of a reverse waterfall type rally headed back down towards these highs here. Not quite 52-week highs there, but it was higher again today because of the news yesterday. Morgan Stanley came out today and they said, oh, hey, we got a price target. It was at 116 down here. They've raised it to 150, which is up off the charts. They say higher revenues and higher profit margins are the reason. Remember, they raised their dividend up like 15 cents, up to 74 cents is where they put their dividend there. So Eli Lilly continuing the rally from yesterday. A couple other things. Broadcom up over 1% today with some news that Apple may buy their wireless division. So that's what came out there. You've got Wynn Resorts, Las Vegas Sands, both higher on the day. A little bit looser. China said they're going to have a little bit looser currency restrictions on Macau, transporting the money back to Shanghai or back down to mainland China. And so good news for the gaming stocks there. More people can come and play and have a good time. They're also working on diversifying that whole area there. So a lot of good news lately out of Macau. Boeing was higher a little bit today. Look, they cut the production of the 737. They're just sitting in parking lots all over the place. And they said they were going to cut production in the next year here, figure out what to do with all their workers and everything. So we talked about the suppliers yesterday being weak. Well, JP Morgan came out with a note that said, we think this is going to affect GDP numbers by as much as 0.5%. And you had a lot of analysts today saying, yeah, it's probably a little overdone. JP Morgan probably got a little carried away there. I'll tell you, that's going to put a big focus on a GDP number. So we know that that's the textbook definition of a recession, 2 negative quarters of GDP. We're at 1.6% right now. If we're around 1.1, 1.2, no big deal. I think most people will say, okay, that's Boeing, that's the suppliers, that's people like that. No big deal there. However, if it comes in around 1 or below, that could really be a shock to the market. So expect GDP to be one of the sort of names you hear a lot about, sort of a drinking game for next year there if you want to play a game with us here. Hey, anyways, you got 76.4% of the S&P above the 50-day moving average. That's just over a 2-month high, so looking good there. You got 40 new 52-week highs today. About half of them finished in the red today. It was just a narrow range day, so it's not like anything was horrible or just sort of fell apart. Just kind of a narrow range day where they poked the highs and then just kind of finished down in the lows of the range. Let's go over a few notable names. Leidos hit new 52-week highs. That was a little bit of a breakout there. I like to point these out to you when I can. 4.5% gain on the day, and that's your best performer out of the 52-week highs today. FTNT. Fortinet, that broke out the other day. We pointed that one out to you. It's continuing today about 1.5%, looking good there. And then you got Broadcom, that's the Apple news there the other day. You got Nike just continuing to run away, looking pretty good there, up about another 1% today. And then you've got Sempra Energy. This was that breakout from the other day, that little one-day reversal we were talking about. That's continuing today, another 1% on that one. There were no 52-week lows. There have been no 52-week lows all week long. Just quiet. Just really quiet out there. Hey, all right, couple stats for you, and I'll share something we're going to share with our customers. So out of, I haven't done this. There's been a lot of people saying, like, a decade in review, and let's talk about all the great things. I really like to look forward. I did a video on Monday about where to invest in 2020. I like to look forward. Who cares what happened? There's nothing we can do about it. Anyways, looking at the worst stocks over the last decade, out of the top 15 worst performing stocks, 12 of them were energy-related stocks. The other 3 happen to be Frontier Communications. If you want to take a look here. Frontier, there you go. Well, not having a good year as well. That was the worst performing stock over the last decade, down 99.45%. JCPenney's in the mix as well. JCPenney lost 96.02%, and then Accorda, which ACOR? Yeah, Acorda Therapeutics. I don't really follow these a lot, but that was down 93.25%. The rest of them, all energy-related names. You got Transocean, which is RIG, ticker symbol RIG. Just a couple names there, maybe Diamond Offshore. It's been weak there. So if you like the idea of picking on weak stuff, as we've been saying, apparently you got to focus in the energy space because there's been a lot of bad performers there. So that's nasty. That is nasty. Hey, before we get to our little stuff here, you got Netflix back to the 200-day moving average. Another great day for Netflix as well. And Micron after hours, man, that's incredible. So I love pointing this stuff out when we can do it ahead of time. So Micron's had a great run here recently, and yesterday was Wedbush. I couldn't remember who it was yesterday. It was Wedbush. They upgraded the stock. They said they had a $60 price target. The day before earnings, they upped it to $70. That tells you they know something. Something's going on there. And so Micron beats on earnings. Guidance is a mixed bag there, is up for interpretation depending on how you want to look at it. But after hours here, Micron's trading all the way up at about 50, let's call it 55.50. All the way up off the screen there. They beat on earnings, beat on revenue. Just an interesting upgrade there. I found that kind of cool. We pointed that out last time when Bank of America did the same thing. But so Micron looking like it's going to start the day higher. Now keep in mind that is a textbook short pattern for the technical traders going into tomorrow. So if you see Micron start 4% higher, very likely you're going to see some kind of a pullback between now and then. So we'll take a look. We'll see if we can dive into it again. All right, I'll share one more thing with you here, and then we'll move on to your questions if you happen to have any. Oh, before I do, PCAR paying out $2.30 in dividends, Royal Caribbean 78 cents, and Tiffany's 58 cents. We happen to own some of those here at Jazz, so thought I'd point that out. All right, you ready for some geekiness? This is part of what we're going to share in our class tomorrow for customers, but I thought maybe this would be fun for you guys to take a look at as well, maybe spark some questions. Here you go. Recession's going to be the big word next year. So what we did is we took a look and we said, okay, let's look at all the recessions as far back as we can go, 1945. And we said, okay, every recession, what we want to know is from the high, right? We go into a recession, from that high down to the absolute low. What was the distance there? Then from that low all the way to the highest point coming out of the recession, what was that distance there, right? So we could see how long or how far to the downside, how far to the upside, try to gain some kind of measurement tool from that. And here you go. So here's the recession performance. For example, 1945, recession starts in February. The recession 6.4% on the downside there, right? So recession ends October 31st, 1945. From the time it set the low to the end of the recession, it had rallied 24.3%. For a total performance during the recession of a positive 16.4%. So we did that for every single one of them. The most recent one that you guys probably remember is, of course, financial crisis. Started on November 30th, 2007. The decline was at 54.3%, largest on record there, very, very nasty. So from the high to that low, we fell 54.3%. But when it finally bottomed and we were still in the recession, we saw a 35.9% rally. That's really to try to highlight the idea that recessions are opportunities. They are not reasons to freak out. I get it. There's a lot going on. You might lose your job. The house is not worth as much, and all that stuff was crazy. I went through it with you, right? But at the end of the day, recessions are opportunities. These declines from the high before the recession into the low of the recession present themselves as opportunities. There is not one point on record where the recession sold off and just didn't bounce, right? Every time it bounced as far as I can go back. I couldn't go back any further, right? So then we want to see, okay, during the recession, what was the actual performance of the market? So like I said up here, in 1945, the actual results of the recession was a positive 16.4% gain. There's only a handful of times where a recession ends and the markets still have yet to recover or are still down. So that tells you here, well, a couple things. So the average decline during the recession, total decline, the average total decline, 18.7%. That's still nothing to be excited about, right? But think about last November, December. We fell 20% and half of you didn't even notice, right? I barely got any emails from anybody. So average recession decline about 20%, except, of course, there's a nasty one in there, median 15.4. The average rally from the low of the recession into the end of the recession, 25.3%. And all in all, the average recession performance, as far back as I can go, is still positive. It's 1.3%, but it's still positive. So rather interesting there, I thought, in terms of that. Now, I'll share one more chart with you, and then I'll tell you what we're going to do on tomorrow. What we wanted to do is we wanted to know, okay, so we've got these lows, but where did the low occur in terms of the recession? So what we were looking at was to say, okay, if the recession lasted from here to here, did we hit the low earlier in the recession? Midway, late in the recession? At what point did the market actually bottom? Where was that actually at? And so what we did is we just plotted it. It's just a simple little graph here, but we plotted it in Christmas colors for you to show you. So 1945, I'll go back, let me just sneak back over here real quick. 1945, the low was 6.4%. So from high to low, 6.4%, that's the amount you had to suffer in that short little recession. The low occurred 11% of the way through the recession. So at the bottom here, we've got the start of the recession. Up here is the very end of the recession, highlighted in red. The S&P actually bottomed 11% of the way through. So it fell rather quickly and then just started to bounce. Although we were in a recession, it just started to bounce, right? In 1948, it started about halfway, right, a little over halfway through. So you're not sitting through an entire recession seeing negative declines. Now, these most recent recessions here, you could argue the bottom didn't come until later, so you had to suffer longer before you saw any form of support. Financial crisis, the S&P actually fell for 80% of the recession before even showing you a bounce. That's nasty, right? I'll give you that. That's very difficult to try to wrap your fingers around there. I mean, if it's a 2-year-long recession and you've got to wait over a year to see the markets even attempt to bounce in a meaningful way, well, that's hard, right? So what we're going to do in the class tomorrow, we're actually going to go further into that. We're going to go through every single sector. We go, okay, what sectors bounce first? How often do they bounce first? We're going to go through all that great data and a whole lot more. So I just thought I'd maybe sneak a little teaser in there, see what you guys think. And now I'll answer your questions if I am able to answer the questions there. We'll see. We'll see what I can do here. Okay, Andrew, hey, did you see the drop in the cannabis stocks there? ACB 2-year lows. Sure did. Yep. Anytime a stock falls quickly like that and doesn't try to bounce, not a good sign, right? McDonald's was a good example. It fell kind of like a waterfall drop there. Can we show McDonald's? Yeah, so McDonald's, same kind of concept here. You get a really extreme discount in a short amount of time and nobody comes to buy it. That makes you a little nervous there, right? General Electric did that a while back. It fell pretty sharply and everybody's like, yeah, discount, General Electric, yeah, let's do it. And it didn't bounce right away. People start losing interest. And when it starts to fall, people go, oh, well, I guess I'll take a smaller loss than what I was thinking. I bought it somewhere in here. Okay, that's great. I didn't get a bounce. I'll get out at break even or a small loss. You tend to get that kind of volume. So with the Aurora Cannabis there, I can certainly understand people wanting to start bailing out on that if it does continue lower. Comments about FedEx? Maybe that's an old question. We got to it. We covered it today. I think there's no hurry to be participating in FedEx. No need to try to catch the bottom on something that falls so aggressively like that, especially in one day. Yep. You're right. The Shanghai factory is up and running for Tesla. They are officially delivering. Yep. I think that solar roof is pretty cool, by the way. I saw what they did where they put they got a permit to put these big tents over the house so people couldn't see what was going on. I think that's going to be a pretty big deal there. I'm not sure how that'll translate into actual revenue, but we'll see. Yep. Yep. So Tyler's asking, what effect does the 737 MAX production and then some of the other planes as well, cutting back production, what effect's that going to have on GE? There's been a number of different reports that have come out from the big analysts out there. We talked about this yesterday too, just that that's going to really hurt their free cash flow overall. There's a number of suppliers that are expected to pretty much just go belly up if they can't get production back up and running. So there's going to be a lot of numbers thrown around there in terms of Boeing. Hopefully they can just get things up and running soon. I mean, you can't help but cheer them on because what's the alternative? It's a foreign company. Come on, Team USA, right? I mean, we want it to be safe, but you know what I'm saying? Like, we got to cheer Boeing on. I love it. Um, yeah, so Tesla's moving higher. I see the comment there. Now we're just counting on Elon Musk to somehow tweet and push the stock lower there. I don't think he wants to do that. I think the real excitement comes beginning of the year when they announce the deliveries there, because they're not known for being spot on with their deliveries. Every now and then, but yeah. Yeah, McDonald's still not trying to bounce. I'll give you that. It is slowly, but nothing really exciting there. Yep. Yep, you got it. Ricardo took a shot on FedEx there. All right. Saw a 10% discount, so well, that's good enough. I'll take a shot. For diversification, do you think tech energy is more important for allocation, stocks bond is more important, or allocation? Do you think that, oh, I see what you're saying. So there's actually a number of different ways to do it. So a lot of people will say, my allocation to stocks versus bonds, 80-20 or whatever you are, is one thing. That's like the top-down approach. It's okay, well, here's where I'm at. I'm of a certain age. I need to have so much in bonds. I've determined this is what I want to do. Now, from there, I can look at my stock position, and then I can decide if I want to be one of those sector sort of weighted kind of investors, or if I'm just going to go flat out index fund or something like that. So it's not necessarily one versus the other. It's like starting first, right, and then going down from there. I hope that answers your question. I hope so. Any thoughts on CVS? Yeah, it's just been floating back a little bit. It's had a great run, right? So CVS, is a handful of these names, just had a really good run, a little too far, too fast, and it's very normal to see a stock do that, kind of flutter around and kind of try to find new support and everything, because there's nothing to go on. Oops. There you go. So there's nothing to go on here. Only thing a trader can do is say, well, maybe the 50-day moving average, or maybe it bases sideways while this thing catches up a little bit. But in the meantime, to see it pull back, I don't think there's any problem with that at all. I have no issues with that. I love it. Manuel, I love it. Thank you, sir. Welcome. Andrew, what do you think will happen with MU tomorrow? So I mentioned that earlier. It's a textbook sort of day trader short position, or anybody that likes that sort of swing trading thing. I would expect to see a lot of I would expect to see more calls being sold tomorrow. It's just a normal sort of setup, at least as it sits now. It's up, you know, it's at basically the same price. But very normal for people to say, okay, that's too far, too fast, and they take sort of a contrarian view on that one. So in my opinion, that's what those people will be looking to do, and since that's what they'll be looking to do, I can't say that I would want to kind of fight that and be a buyer. Yep. You got it. A retirement questionnaire, it should be out, man. It should go out. It should have went out already. If you don't get it today, because I sent them all out already. If you don't get it, let me know. Maybe it went to your spam or something, but I'll resend it if you need to. That's important. Is that an ETF that you use for the oil chart? And if no, so I look at the oil futures directly. I just like to look at the direct price of oil. So that if this is the one you're talking about. Now from there, if you're saying, is there an ETF that I could use? USO is sort of the pure play in terms of using an ETF for the price of crude oil. They're very much identical. The USO just invests in the futures for you if you're not able to. And then sometimes we go further out from there. We'll look at the sort of subsectors, oil explorers like the XOP. You got the OIH, oil service stocks. So you can sort of subcategorize this area if you want to. That's up to you. I just like to look at everything, really. I have no life. Why would a company do a stock split? Because they could, well, not everybody can buy fractional share. Yeah, it's taken off. I'll give you that. It is sort of taken off there. But fractional shares are still difficult because that's not something that's actually done. It's not a global sort of process. That's a brokerage by brokerage model, right? So for example, it's not often that you can, let's say you're at company A and you have fractional shares in Alphabet, right? It's not often that you can actually take those positions and move them to another company that also has fractional shares, because the shares are actually in-house. The fractional part of it's actually in-house. It's not actually something that's exchange traded. So it's difficult. And people usually find that out when they go, why can't I take my 2.456 shares of Alphabet and move it to TD Ameritrade or something? It's two different models. It's not exactly the same thing. I don't even pretend to know if that's something that they'll globalize at some point, but right now it's not. Yep. Took the advice on building something this year. I love it. You got working on a car. Oh, you used car lot. That's awesome, man. I love it. Sweet, sweet. So the year of building something. I thought about doing a video to show everything that I built because Facebook keeps telling me like, oh, it's been a year and here's what you have. So I might do a little something there during the break. But I love it. You got a few weeks left. Go build something. I love it. Cool. I love it, man. I love it. I love it. Thoughts on what analysts are saying about emerging markets? I've been reading a lot more what the sort of big guys are telling their wealthy customers about international, just international in general, not necessarily subcategorizing like that, but that seems to be where everybody's excited about. Yep. And if you look at emerging markets, if you want to use like an ETF or something, you can. EEM is one that comes to mind. So lately, a little bit of a bump up in volume. Where do you think that comes from? All of a sudden, it's just starting to do well? Nuh-uh. That's people making the shift here towards the end of the year. Yep. I love it. Is there a limit to how much you can convert in a Roth IRA? Is that what you're asking? Is there a limit? There's no limit if that's what you're asking. You can convert as much as you like. I mean, you could pay taxes on it, but no limit on that one. Yep. I love it. All right, well, I'll wrap it up there. I hope you have a great rest of your day. We'll be back tomorrow to do this all over again, and if you're one of our customers, we'll see you tomorrow night. Yeah, that's basically all I got. Enjoy, and thanks for watching. See you later.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.